Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Good afternoon.
So stocks in the U.S. and Europe managed a nice little recovery on Monday despite fears over the coronavirus. What's the story today in the global markets?
Yes, as you said, U.S. market continued to be quite resilient as Dow was up 0.51%, S&P 500 was up 0.73%, and Nasdaq was up actually more than 1%, 1.4%. And quite interestingly, small caps also showed a 1% plus rise. The reason for that is because of the PMI numbers actually recovered to above 50 level. So the U.S. economy seems to be quite resilient. Of course, the coronavirus issues are not actually priced into these numbers, but nevertheless, the U.S. seems to be quite strong. And U.S. earnings, the numbers were coming out that it is actually going in an uptrend, and most of the earnings were revised up in the past week or so. S&P was about 0.36% revised up. Nasdaq was revised up 1.86%. Nasdaq 100 stocks were revised up 2.12%. So clearly, most of the other countries were showing an earnings decline in terms of revisions, but Nasdaq and U.S. are actually showing a rising trend. Also, European market have been successful in terms of the recovery, somewhat. DAX, German index, was up about 0.5%. FTSE as well as Eurostoxx were up more than 0.5%. Today, the Asian market also recovered quite strongly. Kospi, after falling over 8% territories from the peak to bottom, it is recovering nicely. Today's Kospi is up about 1.7%, 1.8%, and Kosdaq is up 2.2%. And that trend seems to be applied to most of the other countries, including Japan as well as Taiwan, and even China today as recovery is seen.
So big swings in the Kospi there in the past several days, but oil prices also big swings. They continue to fall, though. They're at their lowest now in over a year. What's your outlook for oil prices?
Well, clearly, if you see the China is the largest importer of oils globally. It is bigger than now U.S. Because of that, when there's a demand drop from China due to all this coronavirus impact, there's a concern about the demand falling and resulting into oil price dropping to the record low level in the last 13 months. It actually broke below 50 level of WTI number, but though today it has recovered nicely, but not big enough that actually at least it recovered to above 50. Because I think that OPEC and oil suppliers are cutting productions. And if that continues, then we think that the price bottom can be reached. However, though, if you look at the oil side, continuation of shale gas innovation resulting into higher supplies, and U.S. percentage of the oil supply is rising. And because of that, we think that the oil price is not going to go up any higher to the significant level as we've seen to around $70 plus in about a few years ago. We think that the oil price should be remain in a range bound. Probably the range have dropped because of the coronavirus. Usually it was range bound between $55 to $65. Now I think it's down to about $50 to $60 range bound over the next few years or so.
All right. Well, back here in Korea, official numbers show consumer inflation is back above 1% for the first time in 13 months. Those figures don't yet reflect any impact from the coronavirus, though. What stands out to you in these numbers, and do you think the recovery in inflation will carry on into next month?
In terms of the recovery, in terms of inflation, I think it might be difficult due to the coronavirus going into the future. If you look at the consumer price, though, it did recover nicely, rising 1.5% year on year in January, after rising 0.7% in the previous month. And it is the highest inflation rate that we've seen in the last 14 months or so. Main reason for that is because cost of transportation rose by 6.2%. Housing and utilities were up about 1.4%. Health-related was up 1.8%. Restaurant and hotels were up 1.2%. And other goods and services were up about 2%. All these were nice, but if you think about what's happening to a lot of these industries because of the coronavirus, I doubt that the prices are rising. We've seen a lot of the closures of restaurants and hotels, even in Korea. It's more severe in China. So because of that trend, the travel by the individuals will drop by more than 20%. And these things will have implications to the price. Therefore, we think that the central bank is most likely to lower interest rate eventually because there is much less inflationary pressure, and we need to pump up the economy because of the less consumption that's made by Chinese tourists as well as Korean individuals due to the coronavirus. So we do need ample liquidity injection as well as the fiscal support in order for this disaster to pass smoothly. Hopefully, we'll see some actions made by Bank of Korea as well as the government.
All right, we'll be watching for that, Mr. Yu, but we'll have to leave it there for today. We appreciate your insights.
Thank you very much.